Hello, my people. Welcome back to this YouTube channel. Thank you for sticking to this particular YouTube channel. Thank you also for commenting, liking, and sharing this YouTube channel. As you do that, I'm going to produce the best content ever that will impact positively towards your trading career. So we do actions, we don't talk. Let's dive into the video. What's a fair value gap? A fair value gap is a price imbalance. Yeah, a space between candles where price move between three candlesticks where price move quickly, leaving no proper bid ask price. What's the bid at? You're supposed to know the difference between the bid price and the ask price. How it works? Yeah, a large institution moves create gaps between candlesticks, usually on the three candlestick structure. Please know that a fair value gap, when identifying a fair value gap, please avoid the colors. The color of the candlestick does not matter. Most of the people makes mistakes by identifying the color of the candlesticks. No, please. The color of the candlestick does not matter when you are identifying a fair value gap. The gap signals an inefficient price movement. Yeah, efficiencies in the price movement. Yeah, the price return to the fair value gap to rebalance or fill the gap before continuing on the direction. So we are going to I'm going to show you on the chart how we are identifying the chart, but let's first do a diagram. A fair value gaps, three candlesticks formation. That's the first candlestick, the second candlestick, and the third candlestick. So the space in between the first and the last candlesticks. Take an example. This is a market continuation, a bullish trend, or a bearish trend. We can say, a bearish trend. The market will come to this fair value gap, then goes on the opposite direction. This is a trend reversal. Yeah, you mark the low of that candlestick and the eye of that candlestick. The low of the candlestick of the first candlestick and the eye of that candlesticks. The wicks, mark the wicks, not the body, because a candlesticks are three parts: the body, wick, and it has the wick, the body. Yeah, there we have the opening and the close of the candlestick. So this space in between the first and the third candlestick, that's what we call a fair value gap. A fair value gap. That's a fair value gap. Yeah. So let's identify uh, this is a bearish fair value gap. Let's identify the bullish fair value gap. Bullish fair value gap. Bullish fair value gap. Bullish fair value gap. Let me connect my internet. Yeah, three candlesticks formation. Alright, let's see it first before we continue. It's opening. Thank you for being patient. What we want is knowledge. This I have a problem of internet, so my internet is a little bit slow. But yeah, let's continue identifying a bullish and a bullish candlestick and fair value gaps. So I have told you that you mark the low of this candlestick and the high of that candlestick. Yeah, and that's what we call a fair value gap. One hour fair value gap, this one can be also a 1 hour fair value gap. Yeah, this is a long position. You take your entry on that fair value gap with at least make sure that you take your buy position, your sales position on this fair value gap also, your sales position. Yeah, please make sure that you target the either sell side liquidity pools or buy side liquidity pools residing below the here or above below this below, and you target the buy side liquidity above your points. Yeah, that's how you are supposed to identify a fair value gap. You mark three candlestick formation. You mark either a bullish candlestick, you mark this the low, or the first candlestick you mark the high, or the low of the high of that candlestick, and the last candlestick the third candlestick you mark the low of the week, the lowest week, the low of that the low of that candlestick. Let's identify in the chart. I have told you, the color of the candlestick does not matter. You have 1, 2, 3. You mark the high of that candlestick and its low. As you can see, the market retraced on that fair value gap. This is 5-minute fair value gap. When a fair value gap is mitigated, the price cannot respect that fair value gap later, but it can respect that fair value gap when the fair value gap is not mitigated. This fair value gap was mitigated. That's why the market went aggressively buying. Yeah, I know most of the people took some buys opportunities in this fair value gap, and you take profit above that. Your sales liquidity, your stop loss below here. Sorry, that's very small. Set a reasonable. Yeah, at least risk to reward of 1 to 3. That's the best. Yeah, that's a fair value gap. We can also, this is a bullish fair value gap. I think in this area there's no fair value gap. As you can see here, there's no fair value gap, so the market cannot respect. But there's a fair value gap here. Three candlestick formation: 1, 2, 3. You mark the first, yeah, there's this fair value gap. Yeah, that's how you're supposed to mark a fair value gap. Fair value gaps in the market. Yeah. Let me see another one. There's another one here. 1, 2, 3. Mark that. As you can see, there's a test here. The market came and test that fair value gap. This fair value gap. There's a test there. We can identify fair value gaps in the market, and you can see how powerful is a fair value gap in the market. My people, this thing is very enjoyable, very sweet and enjoyable. It's another fair value gap here, the candlestick formation. The market came here and bought. The market came here and bought. Yes, your stop loss above here. You take profit at least 1 to the ray. Yeah, that's even enough. This is enough. As you can see, that's a fair value gap. Another fair value gap here. Candlestick formation. And you can see there is a massive sell after your stop loss here. Above that, you take profit, says a liquidity pools. Below that, risk to reward 1 to the ray. That's the best. As you can see now, I know most of you can identify now a fair value gap, how you can identify a fair value gap in the real market. So make sure that you first move with the trend. Don't trade against the trend, because if you trade against the trend, you will cry. The trend is your friend. Please make sure that you trade according to the trend. Yeah, that's all that I can show you about the fair value gaps. I'm going to make more videos about fair value gaps. On my next video, I'm going to show you how to identify what's called a breakaway fair value gap. Breakaway fair value gaps. Yeah, this is all that I can show you on about fair value gaps. Please make sure that you like, share, and subscribe to this YouTube channel. Encourage me so that I can continue making more videos, more useful videos that nobody can show you. I'm just teaching you all these things for free. You're not paying me. You're just watching it for free. Please make sure that at least you like the video, share, and subscribe. Thank you.